Hello everyone, a very good morning, good afternoon and good evening to all. Myself Vaibhav. In today's session of automated trading, we are continuing to work with the RSI and the acceleration deceleration oscillator. This is the second part of this ongoing series for which we started working on last Friday. So after the weekend, we are back again and I hope you are well familiar with the functionality of the RSI. It's a pretty well-known indicator, so I don't think I need to freshly go into the details. Then there is the acceleration, deceleration, and the details of which we have already looked into. Then the ATR for optimizing purposes. Before we get started, this is a standard disclaimer here. I would like to remind you that this session is simply for the tutorial purpose and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of it, I would suggest that you do extensive trial runs and also allow it to run on the demo account for good enough time to get a clear idea of the efficiency of any of the algorithm developed here. And of course, nothing in the webinar is to be constructed as an advice to trade or for any particular setup. Now getting back to the business, here we will take a look of what we are doing. So this is a brief synopsis of the idea. We are looking at trading with the trend. So for that purpose, the underlying setup is that we look at the RSI values, we compare the RSI value of the last hour to the value 6 hours back. For that matter, we are utilizing the RSI blocks with shift 1 and shift 6. So basically the RSI value should be rising. That means the last candle's closing value of the RSI should be higher than the RSI value 6 hours back, and also it should be above 50. So that will mean that RSI is in a bullish territory, and for a sell trade the RSI should be falling and it should be below 50. Then comes the question of the execution, the entry point, and here we are looking at this acceleration, deceleration oscillator. So whenever there is trend change, so here you can notice that we have this RSI value. So suppose let's check for 20 GMT. So suppose if we go back in time to 20 GMT, and we will have the RSI value of 62.54, and then we go 6 hours back in time. So the time will be uh, 14 GMT. So on the 14 GMT we have the value of 61.15, and now here you can see that the prior RSI value is lower than this RSI value of the last 1 hour. So we will be in a position to look for trade provided rest of the conditions are fulfilled. So that is the underlying setup here, and for the sell trade the momentum should turn from bullish to bearish. So whenever the momentum will cross in bearish zone and we have the RSI condition fulfilled in such a moment, we will be placing the order for the sell trade. And then comes the question of where should the entry and the exit order to be placed, and for that we are relying on these ATR values. So on Friday's session we had taken into account the closing value of the prior candle, and then around 60% of the ATR we were relying on that Fibonacci ratios of 61.8%. So roughly we are going in for around 60% of the ATR value. Of course you can change it, I had said on the Friday also. And another question is what should be the stop loss and what should be the target price. Now as I see, when we are trading on the hourly setup, so at least for a couple of hours we can expect the trend to remain in that trajectory only. So suppose if we are going in for a fresh buy trade after these conditions are fulfilled around 20 GMT. So starting from the hour of 21 GMT we can look for a buy trade. So suppose if we are going to place an order here, and it will be valid for at least 2-3 hours, and then the underlying momentum should last at least for 5-6 hours. Means of course it can change any time, but the assumption is that if we are working with the hourly setup, it should at least give us an idea for a couple of hours So I think the target price may be even kept in the multiples of hourly setup or even 4 hourly ATR. So I think even the 100% of the ATR on 4 hours should be good enough, and half, that is 50% of the ATR of the 4 hours, can be considered as our stop loss. So basically, we will get the risk reward ratio of 1 is to 2, and it should be good enough provided we are getting the entry at the opportune time, and of course the luck is also on our side. So now we go back to the setup, and today we will see to what extent we can fulfill these buy and the sell side setup. We have done instrument subscription here. We were working with the USD JPY, and then the position amount defined at 0. We got these AC indicator, shift 1 and shift 2 for looking at the values whenever the cross happens. The momentum turns from bullish to bearish or from bearish to bullish. Then we also look for the RSI values, last candle hour, and then the shift 6. And comes the ATR, as I said, for the opening and the closing values, and this we will utilize historical candle for the calculation of the entry and the exit point. So here we had defined these entry pips, and we had kept the values of 0.6, that is 60% of the ATR of hourly setup. So we were looking at the hourly ATR, and then we will multiplying 8 by 0.6 to get 60% of that value, and then we were going to deduct it. So here we have done that calculation as well, and then comes our buy entry price. So for the today we will need to bring in one 4 hourly ATR block as well, and then we will be in a position to define the stop loss and the target price as well. So now we need to go to the indicators, and here we will need to look in ATR others. Okay, we got the ATR, and we are defining it at 4 hours. So we change it to 4 hours. Shift 1. Now we need to do the calculations again, and for that we are going to need the mathematical calculation expression. Here we will need to do the calculation for order validity, for defining the sell entry point, and the target price, then the stop loss. So we have done by execution side. We will need one sell execution point, and then we will need one for the order validity, one for the target price and one for the stop loss. So for the time being, we get these calculation expressions here. So let's get started with the calculation. So today we will define all these points which are of particular interest to us for the purpose of entry and exit. So now first let us get the sell entry point defined. For that we are again going to need the last hour's closing value. For that we look at the candle 25's closing value, and then we will need to add it as we are placing a limit order. So I will explain to you on the chart. Suppose here let us assume that the trade conditions are being fulfilled. So the time is 9 GMT. We go back to 9 GMT. Now here we can place the order, and as I have said, it is going to be 60% of the ATR. So whatever is the hourly ATR value, we will take the 60% of that and we will add it, and then we will keep it open for at least 2 hours, and of course you can change it. And here I think if the conditions are also fulfilled, here as you can see it is going to end up in loss, and that can happen. That will always happen. Some trades will end up in loss, some trades will end up in profit. That's how it goes, and for that we are also bringing in a conservative risk reward ratio of 1:2. Suppose if we lose money, then we will be losing less money, and suppose here there is good probability that we will be making money. So here we will be making twice the amount of what we lose in a losing trade. So that is also a mathematical ratio at work there. So now we go back in time, and then sorry, not go back in time, we simply go back to the visual Forex platform. So here we are. We need the candle 25's closing value, so we take it at 25. So here we got the candle 25 closing, and then we take in the defined variable, and for a buy side trade, for a buy limit order, we had placed after deducting this. For a sale trade, we will need to add it. So we do A1 plus A2, and we get the sale entry SE. Okay. So here we have defined the sale entry point. Now comes the question of order validity, and for order validity we will need to create a fresh variable, and of course we need first we will bring in the tick time. So let us go to on tick and last tick, and here we get the tick time. Now to the tick time we are going to add 2 hours. So for 2 hours our order is going to be valid, and for that matter we need to place it in the multiple of 3.6 millions. 3.6 millions. I think one order has been placed by my system. Okay, we'll close it. Now 3.6 million ticks are there in 1 hour, so we need to do it in the multiples. Correct me if I make any mistake while I think I have got it right. Yes, to me it seems right, but I'm telling you the number should be 3.6 millions. Oh, here again overlooked. It is tick time, and here should be the value. So we view, okay, we got it now, exactly right, 3.6 million ticks. So we to take tt and we bring in another variable. Now this value is for 1 hour, and we can we can use a new variable, which suppose if you want to keep it for 1 hour, you can multiply it by 1. If you want to keep the order validity for 2 hours, you can multiply by 2. You can multiply by 1.5 in case you want the order validity to be 1.5 hour. If you want it to be half hour, then you can simply multiply it by 0.5. So you can change it, you can use any value as per your need. So we do that, and here we take a fresh variable, and it will be 2. So we got it, and we do a1 into a2 into a3, and we will need to do the type conversion. So for the time being, we don't fill in this result of the calculation. We will let it remain to be changed once we get the pending order block. Now comes the question of defining the sell and the buy side, stop loss, and the target price. So for that, we are going to rely on 4 hourly charts, 4 hours ATR value, and for that matter we take so here we got the 4 hours ATR. Now, as I said, we will be doing it in multiples. So uh, we also need to do the type conversion calculation also. So as I have also said in earlier sessions, when we are looking at using the APY, the pips here are after decimal point. So suppose if you want to define stop loss in pips, you have to multiply it by 100 to get it to get this decimal point placed after this 26. So to move the decimal point, you need to 100 move it to multiply it by 100, and then you will get the pips in integer. And now comes a fresh variable. Create a new variable, and it will be you can keep it like SLP, and it is going to be 0.5. Okay, and one more variable TCP, and it will be simply 1. Here, as you can notice, we don't even need to create it if we are simply utilizing 100% of the ATR. But suppose if you want to change it, say you want to keep the target price 150% of the ATR, then you need to simply change this value to 1.5. If you want to keep it double, then you simply need to change this value to 2. So you can do that. So if you want to go with a risk reward ratio of 1:1, even you can do that by simply changing this value to 0.5. So anyway, it will work. And then we take in a fresh variable for the pips. So we simply do this way. So here we have got these variables. Now we take this here SLP and we get TPP and we get okay, and simple again we need to do here I made a silly mistake again. It should be addition in the elastic time of these ticks. So it shouldn't be a1 into a2 into a3, it should be a1 plus a2 into a3. So guys, suppose if you want not want, if you spot any such mistake of omission or commission, please you can write it in the comment section, as we tend to overlook some minor things and then it screws up the algorithm's functionality. So even I would suggest that you too, while designing any of the algorithm, be careful. Such mistakes happen, the bugging, debugging, we have to do it all the time. And now let's be more careful this time around, so we do it properly. A1, that is ATR, we need to multiply it by the 0.5, so we get A2, then again we need to multiply it by the decimal conversion, so we get A3. And here we don't do this output value, we just don't define it as of now. We will define it after the type conversion thing, so we leave it as it is. And now we are almost done with the basic parameters. A1 into A2 into A3. So it looks good to me. Okay, and let us get now, as we have done so much of calculation for the required values, let us put these values where they belong, that is to fulfill the parameters of the pending open. As we are not going to be able to complete the setup in today's session, so for the day we will simply put in these values which we have calculated so far, and then in tomorrow's session we will do the conditions for the execution. So one is going to be by limit, another is going to be say limit, and we will take logical one block of multiple action, and we will leave the space because of the time constraints. We won't be able to finish this fully. So what we do, we simply fill in these values, and as I have also explained the underlying idea, even some of you might try to join the if conditions on your own, that can also you do. Or then if you want to wait, I will be back tomorrow also. So here let's start with the by execution and the sale execution. So we put in the sale execution price for the sell limit order, we put in the buy execution price for the buy limit order. Okay, we got it right. Yes, default instrument is going to be USD amount is going to be 0.1 million. You can keep it 1 million. If you have a lot of money, you can make it 0.01 million if you don't want to take too much risk. So it depends on your preference. Slippage 2 pips is good enough, as USD tend to be pretty liquid. So barring unforeseen circumstances, most of the time the liquidity is available for trading in the USD JPY. Now, as I am removing these existing variables, we are going to need to define first comes the order validity. As we have done it for 2 hours, we need to create one variable of the long type, and it will be this dt is a long variable, and we name it order validity time. Okay, OVT. So we have created this variable. Now we give it the value of this result of calculation. So the variable has been created and it has been defined as the result of this calculation. The last tick time will be added by 3.6 millions multiplied by 2. So I hope you understand what we have done here. Now again we need to do the type conversion. Here this is integer and it can be any, so double, date, integer, whatever. So for that we take this, we create a fresh variable of the integer type, and we name it SL, and we don't put in any value. We are not defining the fixed value. We simply create this variable and we give it the value of this result of calculation. So it will be ATR multiplied by the stop loss pips multiplied by pips conversion factor 100, and the same variable will be stop loss for the sell side as well. Now we do the same thing again. We create a fresh variable for the target price TP. Again, we don't give it any value. We put it here, and then we put the same result of calculation on sell side. We don't need to put in comment. It's a string. Suppose if you want to put any comment, you can put it. It is not going to make much of a difference. So we have defined these conditions here, and what we have done most of the mathematical thing in today's session. We have defined the entry and the exit points, and then what should be the stop loss and the target price. So our algorithm is not yet ready. We will need to define a lot of if conditions tomorrow, and then it will be ready to go in on the demo account, not on the live account. You put it on the live account only after you are pretty sure that it's working very well and you have done extensive testing as well on a lot of historical data. So guys, that's it from my side. We will be back tomorrow. See you soon. Goodbye.